Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Our video today are the 5 reasons why the housing market is not crashing. As many of you know, there have been numerous videos predicting a housing market crash. There's been a softening in the market, which we pretty much called. And we're gonna use data from housing economists to show why the housing market. This came from a Bloomberg article, by the way, that just came out. Okay. Before we get started through the data, though, please, first of all, if you're a new viewer to the channel, please subscribe because we put out timely real estate videos on topics that are important, which are namely the housing market, things that are going on in housing, and anyone who's interested in housing should definitely be subscribing to this channel.
We're also interested in your ideas. So if there's something that you would like to know more about, for example, if you've always wondered what closing costs were all about, drop us a note and we'll do a video on topics that you guys suggest.
For those of you who don't know who we are real estate brokers in Las Vegas. We have sold over 3,000 houses, all listings. And in 2009, we were the #1 team in the nation. We definitely know what we're talking about. We've done a lot of transaction real estate. Okay, on to the video. Okay, so we're going to go through 5 reasons why the market isn't going to crash. Okay, number 1, inventories are still very low. NAR said there was a 3.2 month supply of homes in August. In February, it was down to 2 months. A normal market's about 6 months.
Okay, so NAR is the National Association of Realtors, and they have this whole team that does nothing but data crunching as far as all the numbers out there regarding houses in every market. So their numbers tend to be pretty legitimate.
The data that NAR has crunched has indicated that the supply and demand equation simply doesn't make it possible for prices to collapse because there's not enough inventory. So on the market that would cause so many homes competing for buyers that they would start dumping prices. There's still a substantial low. For example, here in Las Vegas, the highest inventory we've had in the last 3 years was actually in 2019. We're still at inventory levels of only 2020, and it's actually started to level off, which happens every time this year, and the inventory starts declining. So we still aren't at 2019 levels even, and we didn't have people said the market would crash in, but didn't. It kept going. It was going up like crazy. So inventory is not going to be something that crashes the market.
Okay. So what's the next one?
Okay. Number 2, builders didn't build fast enough to meet demand. Now, as many of you know, builders overbuilt in 2004, 5, and 6. And that excess of building caused too many homes on the market, and everybody, and not only the new homes, but people that were in the resale market were having to dump prices to move their property. And you had all these crazy buyers that were buying. Since 2007, though, every year since 2007, home builders have built less homes per year than the 50-year average of homes that are required to be built to meet the need. And what we've seen the last couple of years is that they've gotten closer and closer to the average. They've now started building less homes.
Right. So
what does that mean? Explain what that means.
Right. So builders, because they're not putting new product out there, we simply don't have the rising inventory of homes, right? We do have people still moving to this country. We still have people reaching adulthood, reaching their home buying age, and there just is not enough inventory to meet all of that demand. Now, builders are not building as much as it would take to satisfy that demand for a variety of reasons. Part of it, for the most part, the largest part is the cost of money, right? Because interest rates have gone up, so the cost of money is too high for them to be able to build homes and make it profitable for them to do that. Of course, all the supply chain issues, those are part of it. Another piece, of course, is labor. Labor is expensive. It's hard to come by. So all of these put together have put home builders in this position where they're saying, you know what, we're going to sit this one out and wait until things get a little bit better for us to be able to build again and be more profitable.
And while new home building being choked off doesn't have that large of a near-term effect, the long-term effect is what caused the run-up the last few years. Because it took a bunch of years of not enough homes being built for all of a sudden, as soon as there was some demand for it to be exposed, that there was a lack of housing, period. And it caused existing supply that were available to be purchased to be run up.
Right.
And that's what caused the housing run up. Okay, the third is a demographic change that's really just happened in the last 2 years. There's three things that have created new buyers. One has been the pandemic and work from home. That's created a huge number of people looking to upsize or just buy a house and live in it because they're spending more time at home. They need a place to work, and then they need more room. Millennials. So millennials are now, they're the largest demographic group, shifting from renters to homeowners, followed closely by Gen Zs, who are right behind them. Remember, they're in their mid-20s, but they're the highest earning people of that age group ever in history, and they're right behind them coming into this market, and there's not enough homes being built for them. And we've said this before, we don't know what's going to happen in a year or two, but we can tell you what's going to happen in 5 to 10 years. I would be shocked if home prices are not significantly more in 5 to 10 years. And when you combine that with the fact you can buy a house and collect rent for 5 to 10 years, even if you're having to pay 6.5% on a mortgage, it's still almost a no-brainer decision.
Right.
Right?
Yes. I mean, we're talking that probably in 10 years, homes will be substantially more than they are today.
And so will rents.
And so will rents. So between inflation, between all these people seeking to buy homes, and between not enough inventory for the variety of reasons that we've discussed on this video and on previous videos, all of these are going to cause home prices to be significantly higher in 10 years than they are today.
The third thing demographically is the large number of Hispanic immigrants coming into the U.S. It's estimated by NAREP, which is the National Association for Spanish Real Estate Professionals, that 70% of all new home buyers in the next decade will be Hispanic, and that in the Hispanic community, home ownership is very important, owning a home. So you've got these immigrants coming to the country who this is very important for. We don't have enough homes being built, and it's just more people coming in wanting to be homeowners, which is really, helping keep this, proverbial crash we've been hearing about for 3 or 4 years now from happening.
Right. So, the bottom line is that so long as there's a buyer pool out there, that's going to support home values.
Okay, the fourth reason why the housing market is not going to crash. Lending standards are very strict, and they have been strict since the crash of the housing market, the great financial crisis. Juana, what was it like back then if you want to go buy 5 houses and get loans? How easy was it to do?
Well, if you fogged up a mirror, it was helpful, but not necessary.
Okay, so anyone could just say, yeah, whatever, give me 5 loans, I want to buy 5 houses,
right.
And it was a little bit ridiculous.
It was, it's kind of the Wild West. Lending standards were, there was this thing called stated income where, you just signed up and said, hey, I make a bazillion dollars, and it's like, oh, no problem. We'll go ahead and loan you money. You don't have to prove any of it. And it was that way for a lot of people. And that's part of what caused the crash last time, is because you had all these people purchasing all these homes with the idea that by the time the homes were built and they closed on them, they could go ahead and sell them for a profit. The problem was that, everything kind of fell apart at the same time for everybody. So now these people were purchasing these homes without any money down, so they had no skin in the game. When the going got tough, they just got out of there. So then the homes went back to the bank. And when that happened, that hurt everybody else who had a home, who was making their payments. So it's just this downward spiral. Okay,
since then, substantially different. The third and fourth quarter of 2021, the median credit score of a home buyer was 786. That's ridiculous. It was over 100 points less in 2007. So you have much stricter. Also, 90% of all home purchasers in the last decade put at least 20% down. 40% of all homes are owned free and clear. So the idea that these bad loans that were made over the last decade will cause the housing market to crash, they don't exist. There's literally, It's like they were so afraid of what happened in the mortgage markets that they changed every single possible thing that could cause this to happen again.
Mm-hmm.
And even with high interest rates and a lot of uncertainty going on, it's still, the housing market is still like, it's adjusting. It's not ridiculous because they've gone up 50% in the last 3 years, but it's not tumbling down, which is very interesting.
So, a lot of the reason why the Fed is trying to, is using its big hammer to hammer housing, because let's face it, the rise in interest rates hammers two big sectors. One is the housing market, and then the other one is actually the federal government, because they have to borrow money at the higher rates. So those are the two big things that the Fed is hammering. And part of that is because of that rapid rise in values, which caused all of this inflation, because we've had too many people chasing too few houses and too few goods that go with the houses. So that's part of what's gone on. So again, there is this really inordinate focus on housing and what happens in housing in our economy, because it is such a driver of everything else that happens in our economy, because we all like to feather our nests. We buy furniture, we buy appliances, we do all these things that revolve economically around our homes.
The fifth reason is that there is literally zero foreclosure activity. Of the last 30 years, this is the second lowest year for total foreclosures. Mm-hmm. Number one was last year. Mm-hmm. There were the least number of foreclosures. So when you hear that foreclosures are up 50%, that's because it was up last year, which was the lowest ever. Mm-hmm. We did a video on this that we did a few days ago that you can watch. It lost Nevada, which was second in the nation in foreclosures in the last quarter. We have 34 times less foreclosures. Mm-hmm. So we have 1/34 of the number of foreclosures we had in 2007.
Right.
So we had 34 times more foreclosures in 2007 than today. There's literally none. In the state of over 1 million homes that are total residential units in the entire state of Nevada, there's like 1,200. Mm-hmm. It's less than 0.1%. It's like there's a couple houses that get foreclosed every day when there's hundreds of houses that come on the market every day that are transacted. Right. They come on the market, they get bought and sold. Well, so the fact that a couple houses are foreclosures, it's not like foreclosures will flood the market.
And it's really interesting because I have been looking at those lately, and I'm completely puzzled. So I was looking at one, and it's worth like $500,000, and the loan on it is like $283, and I'm thinking, why is this even happening? So my guess is that there are just all these extenuating circumstances, because it doesn't make any sense. I mean, if you owe $283 on the house and it's worth $500, why would you just sell it on the open market? Even if you sold it at a discount, you'd still put a good chunk of change in your pocket. So the fact that foreclosures are happening is not disputed. What we are saying is that there is so much equity out there that when the foreclosures do happen, there's something very specific happening in that particular circumstance. It is not because people are upside down in their homes like it was before. It's not, we're not mirroring what happened the last time. This is a completely different set of circumstances.
Yeah, and what I think has got people's attention are three things. One is the prevalence of people to do housing market crash videos because they make money doing them, right? They get a lot of YouTube revenue. There's a channel that makes $30,000 a month in housing market crash videos. And then the real estate agents that are making them because they get a lot of listings. Mm-hmm. They scare people into listing their houses, which I think is a huge mistake, because I think some of these people there was an agent who I had a conversation with her, and her thing was, I had all my investors sell their houses, and I told them we would buy the houses back next year at half the price. And I said, these were investors? She goes, yeah, they've all got their cash, and we're going to come back in a year. I told them they could buy the houses at half the price. And I'm like, okay, so all these investors have now sold their houses. They're having to pay capital gains tax because they're not doing 1031 exchanges. They outright sold them. They're not collecting rent for a year. And then they're going to come back in a year, and what? Even if they buy the same houses again, they're paying capital gains tax. They're still going to end up paying more for the house than the net cash proceeds they got. They're screwed. They're literally screwed. So I just think that's one of the reasons. I think the other reason was because interest rates went up, and people naturally think that interest rates going up causes the housing market to crash, but it's never happened. Remember, the previous housing crash had nothing to do with interest rates. It was overbuilding, right? And the last 5 times interest rates went up, only one of those did prices even decline, and they didn't decline that much. This has just been a combination of 2 things. It's the timing of interest rates going up. They're going up in the spring and sort of peaking in the fall over a time when the number of properties on the market are also rising. So it's like when 2 waves hit each other and then they combine and they look to be really high, but then what happens is they go away. Mm-hmm. So now what we're going to see is the opposite effect of that, I think, over the next few months. We're going to see interest rates peak and start declining as the Fed starts signaling that they'll lower them in the future. Mortgage rates will lead that. Mm-hmm. And then we're going to see inventory start to decrease between now and I predict between now and April, they're going to decline. And then once that happens, then what's the impetus? So, I mean, we went through these 5 things. These are all data-driven things. We've been talking about this for a long time. This certainly is an interesting time in real estate, but there's still people buying. We have listings. We get offers almost every day on our listings. We know there are people buying houses. One more interesting thing that I read about. I'm hearing a lot of this. We were going to do a video on it, but decided not to do a video on it because we talk about it quite a bit. The number of people who bought houses and own them at an insanely low have decided not to move. Mm-hmm. So that normal churn of people who put their houses on the market and then they sell and move to somewhere else have decided to stay put. Because they have a 2.5% interest rate, they don't want to sell it and go buy another house and pay a higher interest rate. So they're just saying, I'll just stay where I am. Mm-hmm. And that's locking down. That's the thing that stopped this flood of properties from hitting the market. We still have less properties on the market today than we had in 2019 when it's supposed to crash. We have like 30% less houses on the market than we did in 2019. And remember, 2019 was a completely normal market.
Yeah, this was prior all the craziness. So
this is prior to all the COVID craziness.
Right. So where we are now is a market that is behaving pretty normally. This is the opportunity to scoop up maybe something that makes sense for you between now and the end of the year, or now and sometime the end of January. And then we've got spring selling season coming with more properties coming to market, more buyers coming to market. And here we go again.
None of this precludes a black swan event. But like we have said many times, we are active investors in the market. We are ourselves personally looking to purchase a property that makes sense, that's a deal. And we believe that 5 years, the market will be substantially more. We believe rents will be substantially more. We believe people that buy investment properties will build wealth over time. Certainly in 10 years, properties will be worth. There's almost no 10-year period where if you bought a house, rented it out, and then sold it at the end of 10 years, you didn't make money. Even if you bought at the peak of the last housing run-up and then waited 10 years, you still made money between the price appreciation and all the rents.
Right.
Yeah.
So if you are interested in real estate, please subscribe, hit the notification bell, leave us comments. We want to know what you think. We want to know what's going on in your market, because we know that there are people from all over the world watching the channel. So we know what's happening here in the U.S., what's happening where you are. If you're in a particular pocket here in the U.S., we want to know what's happening in your particular market, because real estate is hyper-local. So let us know your thoughts. If you have suggestions for a video, something that you'd like for us to talk about, please leave us a comment, and we'll consider doing a video if it's something that's in our wheelhouse and we can add value to you.
All right. Thanks for tuning in. We'll see you on the next video.
Bye.